The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at the markets coming out of the 4th of July holiday, all three wheat classes sharply higher on Wednesday. That, along with crude oil, the stars of the show. We saw a two-sided trade in quart of beans. We saw mixed action in livestock. We're going to take a big picture look at things here today now that we've moved past the 4th of July and those USDA reports from last Friday. Joining us to do that, Mike Zuzolo with Global Commodity Analytics. Mike, always great to catch up with you. Hope you had a awesome 4th of July. And, sometimes the 4th of July can be kind of a market reset, so to speak. And I think between the weather and the 4th and all those report surprises last Friday, I think we got a little bit of a reset anyway here.
Yeah, I hope so. I think the wheat market in particular is a reset. I think that we got past the acreage numbers in the row crops and got past some of the weather in the row crops. And that allowed them to do their own thing for the past several days. But when we came back from a holiday, as you said, Jesse, I think the wheat market giving the crude oil market giving a boost to the wheat market in a big way from a short covering rally mindset was very welcome. But I really think the stocks numbers for wheat being at a 12-plus year low at 580 million bushels, and combining that with the fact that we have 46% of the Kansas wheat crop harvested compared to 80% last year. Clients and some of the people I've spoken to late last week and again this week are suggesting they're still not in the fields and they're going to be behind again another week. And I think it's finally caught that maybe Russia, the Black Sea grain deal, Europe, those things, while they're still very important, they're not everything in the market. So I say that tenderly, I say that gingerly, because it was one day higher. One day doesn't make a trend, but 50 cents higher, hard red wheat leading the market. That's a really good start, I would say.
I'm glad you brought context into this situation, because I was going to say on the flip side, I know maybe a little bit of Black Sea premium was underneath this market as well, but I like how you put that, looking at just the general harvest of HRW, et cetera, et cetera. It just feels like a lot of things kind of combining to give this wheat market a bit of a boost. And as you mentioned, led by HRW wheat here, Mike.
Yeah, and I think, you have the spring wheat conditions, very disappointing on the crop conditions report. And I think if I could kind of shotgun pattern 30,000 feet, assess the markets and the grains on Wednesday's trade, I would say they put the weather on the table. They put the acreage numbers on the table, and they traded crop conditions more than anything in some of the outside markets, because soybean crop conditions were very low compared to the trade guess, coming in, below 50%. That was a real shock to the market, at least to me and other people that I talked to and my colleagues in the industry. And I think that's why the bear spread was so notable on Wednesday, and soybeans in particular, where the July lost to the November. And so going back to the wheat, though, I think you've got the spring wheat in a very serious situation. Some rains are expected, but it's getting to the point where we could start curbing the yield there in that part of the northern plains. And Canada is not out of the woods either.
Let's talk a little bit more about wheat. I'll pull up on our video feed the monthly HRW wheat continuous chart with the Bollinger Bands and more, looking at all these different stochastics. I know you always do a great job explaining this for us. So walk through what you're seeing right now in this wheat market.
Well, the interesting thing about this, and we did not talk before the show, and when you brought up crude oil, I was astounded, but it shouldn't, because you really are a good market person to help the analysis and the analyst out, because if you look at this monthly hard red wheat chart with the wedge and how we've essentially gone sideways for now 4 months, essentially, it looks almost identical, in my opinion, to the crude oil market, the WTI market. It just continues to show that either the market hasn't made up its mind on the trend, or it feels very, very well balanced between the supply demand fundamentals. But we have not broken one way or the other in terms of a new trend since the point of that wedge that's purple, magenta colored, has been formed. And underneath us is, in the orange line, is the 200-month moving average. Above us, as you say, is the Bollinger Band. And those are the kind of the two things to be watching as far as support and resistance levels. And finally, as you brought up the stochastics, much like some of the other longer term charts in some of the grain complexes and some of the commodity indexes, we are getting a buy signal where the purple line in the bottom has gone above the green line. So the faster stochastic now showing a buy signal. That's the first good buy signal we've had with this oversold of conditions since going all the way back to 2019. So the first real buy signal in 4 years, which to me says something, especially given that that buy signal lasted through the month of June as we got into July. So we can say at this point, based upon my analysis and how I look at technicals, we have a monthly buy signal in the hard red wheat stochastics for the first time in 4 years. I hope by the time we get done talking at the end of this month and going into the 1st of July, we'll look back on today's video and say that did mean something to this market.
I want to segue from HRW to corn. Let's look at the monthly continuation chart there. And you and I have talked quite a bit about wheat needing to be the upside leader in these markets. I wonder now that USDA's delivered us some acreage surprises in corn and that market really taking a hit the last couple of sessions, can wheat maybe become the upside leader here in corn? Can you touch on that and this continuation chart for corn for us?
Yeah, I'd be happy to. I think this is a really interesting dynamic here because we have in the SEP wheat corn spread, that spread back in soft red minus the corn back to almost $1.90 a bushel. Now, it's not near that in the still lead month contracts of July, but those are getting ready to go off the board very, very soon. And so that takes me to, okay, where the July corn is at around 548. That's what the bar chart is showing us. But the star, the orange star down by the 200-month moving average at around 480, 485 is where the September corn is going to get ready to take on the lead month futures mantle. And so the question the next 10 to 15 days is, does the July fall to the September, or does the September rally to the July? And I would say to you, it's more likely after the July 12th crop report, if I'm right about USDA lowering yield by a decent amount, we should see them come together where July falls a little bit more, but the September really makes up headway. And the reason I feel that way, Jesse, is because my price model I use would suggest at around 480 futures, where essentially the September is, we're now already pricing in that 2.6 billion bushel theoretical carryover from that big jump to 94.1 million acres and that 181.5 bushel yield that, as I said, we should get a reduction on here in about 7 days. But right now, I think that we're pretty much dialing in the biggest carryover we're probably going to see for the 23-24 marketing year. And that's, again, what I like about this chart as well.
Let's go to the monthly soybean chart as well here and take a look at this while we're continuing on our monthly chart conversations here. Obviously, some changes in the soy complex, the big acreage surprise from last Friday, and more. What's your thoughts here as we take a look at soybeans, Mike?
Yeah, this is a harder chart to read because you've got a buy signal forming in the monthly stochastics down at the bottom, kind of like the hard red wheat, but not as complete. They're just now doing it. But by the same token, today's close is back below the the June high, and also where we closed the month of June out. And so you can go down, you could probably slip to 1450, 14 and a quarter where that dotted green line is, and not really lose any chart support. So you could literally go down about $1, $1.25, and not lose any long-term chart support, but you'd be losing a lot in terms of pricing potential. And this chart makes me just feel as though the distance we are away from the 200-month moving average in orange, that we're on the right track by rolling up puts and staying with the short side of the beans. Unlike the corn, where we're pricing in about a 2.6 billion bushel carryover, the beans are pricing in around a 125, 130 carryover by taking those new crop beans up towards $14. And we got within, I think, 15 or 20 cents of that again today. So when you get to that price level, you really are dialing in a pretty tight carryover. And if you want new crop beans to go even higher, you really have to have weather on your side. But I would say if you get weather back on your side, it's going to help the corn price more than the beans, just because of that acreage battle and what the trade did in terms of the funds and how they bought the beans and sold the corn. I'm not sure we're done buying beans and selling corn here, Jesse. That's the fundamental side of this, because those crop conditions in soybeans were so low compared to what the trade thought. We'll see how we come out here in the middle of the week, later part of the week.
Well, we are having a conversation here today with Mike Zuzolo of Global Commodity Analytics. Mike, and I just want to ask as well, as we're kind of talking big picture and grains here. Obviously, we have not talked since USDA brought out their surprises last Friday, and you've had a few days to kind of digest the numbers. You mentioned that upcoming July 12th WASDE report, what we'll see there. Overall, I mean, I know demand, of course, underneath these markets is going to be a big issue moving forward. So just to kind of put a bow on this grain talk here with all this data that's been thrown at us, I mean, what's your thoughts here when we have to kind of balance the supply versus the demand side right now, Mike?
Yeah, between the grain stocks report and the fact that the commercials were not holding that much compared to last year, and the slippage in the cash basis, along with the decline in futures, I think that we're going to see, if this wheat market continues to rally, the corn buyers come in and buy. And that could happen maybe as soon as the end of this week, Jesse. But I would certainly want it to happen by the beginning of next week. And that matches up with that July corn and those July beans going off the board and finally expiring. And so that's kind of the next step in the process of all this data, as you say. The stocks report, I will say once again, especially in the wheat, but to a lesser degree in the corn, really didn't get much play at all. And I thought it would. I thought the stocks report would be the news story because of the way the spreads were trading, but it was really all about acres, and we're just now starting to come out of that.
Yeah, and that acre number, of course, I think caught a lot of people by surprise. We'll just have to see how that all shakes out as we move forward here. Let's go to livestock, Mike, and the cattle market on Wednesday. It was I was a little surprised with the fallout in feeders and fats as we went through the session, but finding some sharp triple-digit losses there. Overall, as you look at this cattle market, pull up one more chart on our video feed, the monthly live cattle chart. Just walk us through what you're seeing right now in this cattle trade.
Well, I think this chart does a good job of giving us a mindset of what the trade is doing right now. It keeps trying to push the top end and get bullish news and push higher, but it does have to frequently go back and check support levels and check and make sure that the demand is still with the market as it goes higher. And that's essentially what that purple line is doing. If you notice, there's two support lines. The green support line, the longer term one that is right up against the major, I believe that's a 52-week or a 12-month moving average, maybe 24-month, I can't remember. But notice how close they are to one another. We separated from that in the middle part of 2022. That was after that very strong July cattle semi-annual report, and then followed with a couple cattle on feed reports that really shook the pillars of the market. And we escalated the gains, but we have gone back almost every month. If you look at that purple line, almost every month we've tested that purple support line before going higher. And that's very rare that you would test a chart line every single month or every single cycle, whether it's a weekly or monthly chart. So here we are again, June fat cattle off the board at about 180 plus. August takes over as the lead month, back down to 175 minus, and we're now checking that support line. So now the market needs to see another strong cash move here on good demand, hold that 180 plus cash market. Then we could probably rebuild the building blocks and try and challenge those June highs. If we fall below that purple line, though, the way this chart's set up with the very steep move up in this last 12 months, it could fall back to that green line very, very easily, especially given that the funds are still, I think, net long about 100,000 contracts of futures and options. So I'm back on the mindset that obey the technicals, make the technicals your friend, especially if you've got profit, and get some hedges in the back end in place if that front end doesn't keep leading you higher.
Well, and obviously with the 4th of July holiday here in the middle of the week, I know feedlots, we're going to be watching that cash cattle activity, and it sounds like they're going to be trying to keep this market as steady as possible here this week. I have to wonder your thoughts there as we look at some of that cash cattle demand out there in the countryside, Mike.
You know, the USDA's activity index numbers for the beef were down 7.3%. That was pre-holiday. I didn't like that because that was the big featuring week before the holiday. And that means pretty much all the activity around the country in all the stores that are sampled by USDA was down about 7%. So we've only got one summer grilling holiday left in the 2023 summer grilling seasonal. The other thing I'm working on right now, Jesse, and I'm actually bringing in a colleague or two that are actually financial advisors or have securities licenses, because I do not, but we're seeing China's manufacturing going down the hill. We're actually seeing the U.S. manufacturing going down the hill with today's Commerce Department report. I'm very nervous. We're already in like a manufacturing recession already in both the United States and China, or heading that way quickly as we get into the fourth quarter. And I really am beginning to get more and more concerned about that recessionary probability, because the market's kind of dissed it and said, oh, it's not likely now. We're going to avoid a recession. I just don't buy that, especially if the Fed comes in with 2 more interest rate hikes this year.
Yeah, that's a great point, and I think that's something that bears watching here for sure the next few months ahead. Mike, over in the hogs, I look at front month hogs, that $100 level. Can we go much higher than this right now? What's your thoughts here in the hog trade?
Yeah, the hog cattle spread would say you could probably eke out another $10, maybe $20 more in terms of hogs gaining on fat cattle, but that could be the hogs standing still and the cattle dropping $20. You just don't know with those spreads. But I think that's been the majority of this, is position shifting since we've crossed through the first half of the year and we're now in that third quarter. I really think that the funds are probably moving away from wanting to be so short the hogs and so long the cattle. And I think that's probably something that's going to stick with us. But I would say $100 hogs in the summer months, late summer months, that's plenty rich. And I think this is a great hedging opportunity for the nearby, or keep your marketings very, very current at this stage of the game.
Well, we've been talking a lot of big picture stuff here today, Mike. Before we let you go, any final thoughts? Anything else you want to reiterate for folks today?
I would say the crop weather is not off the table yet, Jesse. I would say a lot of people have tried to put that baby to bed, but I think in terms of the east of the Mississippi River, while maybe we had 75%, 70% of that crop being in a 2012 drought situation, and that's maybe worked its way back to 30 or 35%, a third of that eastern half of the Corn Belt still in a major drought situation, including a large swath of Iowa, still matters a lot to the national corn yield. So I think that's something in another 2 weeks, especially if USDA cuts the yield in corn 6 or 7 bushels, which I think they could. They probably will go 4, maybe 4.5, but they could go 6 or 7 based upon my analysis at this point. If they did that, I think the trade would wake up to that weather right away and start making that a top tier issue once again.
Well, Mike, great thoughts as always. If folks want to look at your analysis, work with you, get some advice, I know they can reach out to you very easily. How can they get a hold of you, Mike?
Best way is to go to globalcomresearch.com, and it's globalcom with 2 M's, research.com. I did a blog post this weekend that really covered a lot of ground and what we're talking about, but also getting into the nitty gritty, talking about some global crop prospects as well. China's back on my radar screen, for instance, Jesse. So take a look at our website and get a trial. It's for free for 2 weeks.
Well, we appreciate all the time with us here today. Mike Zuzolo, Global Commodity Analytics. Thanks for joining us, Mike. Have a great one. We'll talk to you next week.
You too, Jesse. Thanks so much.
That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.